journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, so getting back to those, back to the NASDAQ bottomed here on the 11th, and then we rallied up 1, 2, 3, 4, 5 days, and we've been in this real consolidation here. Now in 29, it was a 7 day, it was actually 7 days from October 3rd into October the 11th. And then from the 11th to the 28th was that famous day known as Black Tuesday, I think is what it was. Anyway, I don't know if that's going to happen or not. Folks, I really don't. I'm just looking historical stuff, and the fact that this lines up so almost exactly to what happened back then. It's crazy because it was about the tariffs, and then there was something else that came on Bloomberg today that was reciprocal. Wow, can't even think of the words. It's a little late here, so hold on. Let's get back to looking at this on a smaller time frame here. We'll just look at here on 13-minute. You see we came down, and you can see what we're doing now, folks. This is what we call an A, B, C, D pattern right here. And I believe we just made new highs on the day. Yes, we did. So that's a pretty big, interesting thing that's happening right here with the NASDAQ. Let's just look at it for kicks and giggles and see how accurate it really was. They're all over this place, folks. The problem is you can't get them all. That's it right there. It should be up in this area. We're running into a little bit of resistance, okay? Now let's go over here and take a look at crude oil, all right? Let's get a look at crude. I'm just tired of talking about the stock market, folks, honestly. This is crude oil. Today, we were watching for a 382 retracement here. We got it. Just wanted to show you. We had the A. First of all, we had this is the fun part. This is much more fun than the stock market for a couple of reasons. One, it's not as herky jerky, but look at the someone's bad. Hold on. There's your ABCD to the upside, and we know that when you have a wide-ranging bar, what CD leg has got to be 1.27 or higher. And if you come up and just connect this to 127, thanks to our good friends at Ensign, you'll see that it gets us pretty close to where the high was. And then this was the key, folks. This took us really nice. Folks, look how many hours it took, a day and a half to make that level. And if you take a look at this from the short side, look where it went to, folks, to the exact tick, 6767. And that's what you kind of like to see. Anyway, that's pretty much it. Now, I've had several questions about the wheat market. If you have any questions, call in. Otherwise, I'm going to just run through these as people ask me about it. We were going to buy the wheat. I don't even know if I haven't even checked, folks. That's how. In fact, hold on a second. Let's get the wheat up here, and we better put the hourly. We were going to buy that, I believe, at 54. Yeah, well, looks like we did okay here. Hold on a second. Let's get this here. Yeah, it's doing all right. Excuse me, folks. The buy was at 57 and the stop was at 37. So 37 was way down here. There's the buy right there at 37. Yeah. Wow. Just a minute. I got this thing messed up. Hold on. Let me make sure I get this correct. We were going to buy it at, the buy was at 57 and the stop was at 37. I never got information on this, folks. This is a 60-minute chart from today, and I didn't even see that. Wow. I don't understand what happened to that. That's a losing trade. There's no question about it, because we were going to buy it right there. We're buying it at 57 with a stop at 37, and it went below 37. Had a little bit of a rally here, and then it just dropped quite a bit. But that's a losing trade. Sorry about that, boys and girls. I didn't even see that. I haven't been focusing much on the grains, if you can imagine why. Let's talk a little bit here about the U.S. dollar, okay? Bear with me here for a second, since we'll see if we can get this in here, because the dollar is in a fight for its life, just like everybody else is. So there's where we are. We've actually started to have a little bit of a move now, coming off of that bottom. That told you that euro was topping back there the other day. Let's go to the weekly so we can, well, you know what? This is pretty cool here. So let's just take a quick look at this. And there's the big move right here. There's the A, B, C, D. Let's see how close it came down to the old A, B, C, D. All right, there's your A, B leg right here. And there's your old 382. Now we came down with these wide bars. You have to suspect it's going to go at least to 1.27. So if you mark that and come over to look at it at 1.27, 127, there we go. All righty. And there's the exact low, folks. It's pretty nice. But anyway, that's what you can see here. Not doing very much right now. We saw that. Wow, just a second here. Let me get this out of the way here. This surprised me about the wheat, because nobody said anything to me about the wheat. I must have this thing wrong, because believe me, they tell me when I'm wrong, and I haven't heard any bing yells and screaming yet. So that's what we're paying close attention to here today. So let's move on here to the next one. This is that NASDAQ that we were talking about just a minute. Let's get over here and talk about the old euro, since we're in the euro business here. There's where we are. Move this over just a tad. And here's where we are, coming down pretty good. Now this means the dollar's going up, and this is coming down, as you can see, and it's been coming down very, very nicely. And you can see here, there's your first A, B, C, D move right there, okay? Now let's just see if it follows through with some of the things that we like to talk about. There's your A, B, there's your C, D. Okay, it goes down lower. Well, you got to take it off of that one. But let's see if this is a 382. And I can tell you that it's probably off by just a little bit. Yeah, it is. It is an ABCD. There's the ABCD, but it misses the 382 on that. And it looks like it goes to about that's pretty close. Anyway, let's just draw the ABCD in, because that's good. That's over 2 days. So that's a valid. There's the low on the Thursday, and here's the high on Friday. And I think it's a perfect ABCD. Let's just double check. I actually, folks, if you realize what I'm doing here is I'm stalling because people are asking me about this stuff. And all I do, folks, is I go back and I look at the patterns and I see if they match up. If they match up, it gives me a shot. That's all I'm looking for, is a little edge. Sometimes the edge is better than you might think, but other times it's not. That's the real key to what we're paying attention to here. Now, we've got to talk about soybean meal, too, because that one I happen to be involved in. Let's get up here and get the chart up on soybean meal, and we'll talk about that here. I'll tell you one thing, folks. European time is not very conducive for a healthy trading environment, because, boy, the hours are really messy. All right, let's take a break, and we'll be back with the soybean meal in just a second.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN. educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
All right, folks, let's get down to business. This is such a big thing, I shouldn't dodge it because I might be wrong, I might be right. But if I'm right, I'm going to save you a hell of a lot of money. That's about all I can tell you. Okay, let's go through this one more time because we are in the window of the crosshairs of something really, really bad. I don't know if it's going to happen or not, but that's all I know. Okay, let's bear with me here. I'm here with some folks that, okay, let's get up here. First of all, I base everything on what happened on cycles, okay? I use the Bradley model. The Bradley model is very good. Here's where we are. It also happens to be the first day of spring. But that doesn't mean very much at all. Well, it is an equinox, of course, but it certainly does, but it's a spring equinox. But this is these key dates are very good. If you remember these dates, if you looked at those dates, these dates are damn good. And here we are. This is the biggest one of the year. Now, that doesn't mean the trend's going to be down all the way. These just means it's key trading days, okay? When it all fits together, and the fact that you've had a rally, this is what's super important, folks. Okay, this was the biggest bull market of all time. This started in 1911, and it went up to 1912, and it went up to 29. So it was 17 days. Wow. It's almost the same. This one's 15 years. Anyway, look, this is what happened. It took out the monthly low, bang, and then it had the rally right here. That's my first thing to look at. Second thing is the tariffs were out there. The Smoot-Hartley Act just came in, and that's what triggered the whole darn thing. All right. Then the market broke, and it came down. Remember, folks, this went down from 383 to 42, making it the greatest single buying opportunity of all times. Because it went 1,000 times, folks, over 92 years. Okay, this was also the high of the 92-year cycle going back to 1837. Okay, that was when President Jackson, Andrew Jackson, he abolished the Fed. If you read the book, you know, what was it? Secrets of the Temple, and there's a couple others that are interesting about that, about the Fed, about the Ellis Island, the creature from Ellis Island. That's the other book. And Ellis Island is in, I believe it's Georgia, and it also is where the Fed was founded for where we are right now in 1913. Okay, now, the reason why I'm telling you all this is because it's going to give some great opportunities if it works. Now, I was with you guys starting back in 07. Okay, I talked to Tom O'Brien. He said, "Can you do the show?" And I said, "Sure." There was the big butterfly right here in May. Okay, then the market broke. This was the big one right here. This is what we're looking at right now, folks. This is exactly what we're looking at. Took out the previous month low. There's where you are right now. Now, look, it might take a couple of days, but be careful, because if it does once we get below here, it's lights out, because then you're going to see you see how quiet it was here? This is not quiet, folks, and this is what we're waiting to see. It might take out all the way after the high is in, maybe take a couple of days here or there. I don't really know, but that's what we're paying attention to, okay? I know it's repetition, but repetition is the mother of knowledge. Going back to 1929, the Smoot-Hartley Act came in 29. This is when they said they were going to bring it in. Here's when it was authorized, and it took the market down. This was on April 1st, 1930, and guess what April 1st is coming up for? Shut the front door. That's next week. So watch April 1st. That's a big anniversary date. The market rallied back 60.9%, and I don't know who's calling me today. I don't really care. I've got to turn this off. I don't know who that is. Oh, shucks. Sorry, folks. Anyway, that's what we're watching. You can see you got to be careful in here, because it's a big day. Hey, and I could be wrong. I'm often wrong, but never in doubt. All right, now let's take a look at what's happening in the rest of the world. This is really important. All right, look at the FTSE. Look at the FTSEs with the head and shoulder pattern, which is down today, okay? Look at the FTSE right there, all right? You take a look at the next one. Let's go Hong Kong. Hong Kong's down already below 24,000 after hitting it just 2 days in a row, okay? And it's a Friday, too. And then also, if we look at, this is Hong Kong on the long-term weekly. Look at this on the long-term weekly, making the same high. So all of that is important. All right, now we're going to look at the German DAX. German DAX has made all kinds of ABCDs and has turned around and is down again today. So those are things telling you that the rest, and these markets are way up in the air. They haven't had corrections like we've had here. And our corrections have been very mild for quite a while. Gold and silver, you bring it up here, go through those one more time. Jeff Hughes is our guest coming up. He's going to save my bacon one more time. There's where we were. Silver is now trading, hit below 33 this morning, folks. It's bounced back a little bit to the 382 of that move. And if we look at the GLD, I don't know where the price is now, but that's where we were. Was 281 was supposed to be the high. And you know what? I'm not going to worry about that. And here's the one that really has interested me is, the fact that this was the high in 2011. Look at the gold miners, folks. All they can do is make a 61% retracement over a 15-year period in the greatest bull market that we've had. And we've got gold made a high up here at 30.65, and it might be 30.75. I haven't checked it recently, but that's what we're watching here. Okay, so let's keep our powder dry, and we'll see what's going on here. We've got a couple other ones that look interesting here, so hold on just a second. And I did the DAX. I did the this is the NASDAQ. Okay, now this is what we were expecting to be on March 21st, but we have not taken those highs out of yet. That means the market's a little weaker. Now the Dow Jones has taken it out by just a tad, and so has the S&P, but not this. So that's another one. And this has been the big daddy rabbit, leading it all the way. So those are the main things that we're watching right now. I'm still concerned about that wheat because I don't even realize that. I'm alerted when that stuff happens, and I don't know why. All right, here's something that really is troubling. This is the high in the gold market here. The high was made back here on March the 7th, and since that time, the market has been, actually it made a higher high here by just a little bit. Look at the players, folks. Look at the players. Where are the players going? I mean, come on, give me a break. Something's happened in here. So you got to be really careful up in this area. So those are some of the things that I'm paying attention to. And finally, I was right long back in 87. This is where we are right now, folks. In my opinion, we're right here. And there's the Bradley, and this is where we're heading down. This was the Bradley here. We're bottomed on March the 5th, 2009. I kept this, and I got to be right once in a while, so I kept it. And it said the market would have the best rally in 70 years, and I was wrong. It was the best rally in 92 years. And it kept going from 42 on July of 32, and we topped somewhere around 45,000. I believe it was late January, early February in the Dow, because they all took turns doing it. But we live in interesting times, as they say, so let's keep our powder dry. Always use stops, and make sure you listen to Jeff Hughes coming up, because he's got some great stuff to talk about. But we got all these markets topping, so we got to be careful. So we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with Jeff Huge of Alpha Insights. He's got initial downside targets for the S&P 500. Well, I had to leave the country. I was being bombarded so much, but not really. What are you looking at here, my friend? It doesn't look very bullish to me.
Hey, Larry, how are you? I'm glad to be on your show.
I'm good.
Today. You know, we entitled this slide our initial downside target for a reason, because we think this first move down to around 4,800 will just be either wave one of a 5-wave decline at one larger degree of trend, or wave A of an ABC type corrective 3-wave form that's going to be a much larger scale than people are used to, because we've ended this huge mega cycle up off the 1932 low. I heard you talking about that Bradley model turn date, which also happens to be a 360-degree Gann turn date today as well. And I'm with you. I think we're putting in an interim high here, and the downturn is going to carry the S&P probably down to around 4,800 before it's done declining. Maybe we catch a little bit of a bid at 5,100, which is where the 382 comes into place. But you've got this confluence of support down around the 2021 high, which was 48.18, and also the 50% retracement at 48.16. And then we have an uptrend line that connects the lows off the 2020 low and the 2022 low, which coincides pretty closely with the 200-week simple moving average. All those should kind of coincide right at that 4,800 plus or minus level.
Well, it looks pretty good. Let's go to the next one, and we'll take a look at what you look at. Wow, look at the S&P's fallen off the leaderboard, hasn't it? Holy cow.
It sure has. You know, the S&P's negative for the year, and what's leading? Well, you know, even palladium and platinum are up, single digits, but silver and gold are up double digits, and the mining stocks are up 20-30%. And that's just year to date, okay? We've been talking about the metals and mining space all year long. In fact, we made our first recommendation to buy gold back November 27th, 2023, and we called it our top actionable trade idea for 2024. And then we relabeled it our top trade for the decade. And we think it will continue to run for, the better part of the next 10 years. But, we think there are alternatives to stocks, and right now, metals seem to be the best relative performers, and they could be terrific absolute performers as well going forward.
Okay, we'll move on to the next one here, and that is this is the gold S&P, right? Wow, that's an interesting one.
This is the ratio. This is the stocks versus gold ratio. We look at the S&P 500 versus spot gold. And, we're looking at a very long-term chart that goes back to 1970, right? So we're looking at a relationship here that has just broken the 10-year moving average to the downside for the first time since, really back in 2001 or so. If you recall, the entire decade of 2001 to 2010 or 11, I believe, we saw gold radically outperform stocks, and I think we're beginning the next cycle. In fact, if we just drop down to that ascending trend line off the 1980 and 2011 lows, I think that would equate to about 35% relative outperformance of gold above stocks. So we want to be long gold and gold mining shares and really short or avoid traditional S&P 500 stocks for the foreseeable future.
Okay, now this is the S&P GLD. Yes, I'm involved in that.
Yeah, I heard you talking about, there might be a short-term top coming up here. We agree, actually. If you look back to our initial recommendation on November 27th, 2023, when GLD was $192, it's up 43% from that point as of yesterday's close. And we had a target at the time of $280. Well, we tagged that level. And so, now we're a little suspect. We think we could be at the top of a third wave advance, which would be followed by a fourth wave correction. Now, fourth waves tend to be shallow and lateral, so I'm not too concerned about a crash in gold or anything like that. But I do think that it could mark time for say the next several months, weeks to months anyways, before we start to push to the next highs. I had a short-term target on spot gold of 3,060. We got to 3,065. My next target's 3,400 by year end. And then from there, I think we can make steps up to 4,600, 5,800, and then 8,100 over the next 3 to 5 years. But, it's not going to be a straight line. We're going to get these choppy periods. And what I want to say about gold is buy the dip, okay? Don't sell your gold unless you're a day trader and you think that you can be nimble enough to catch it back on the way back up. But if you're accumulating gold, hold off on new buys until we get a pullback. I think you'll get a chance to load the boat in the 240 to 250 range. Call it 250 just to be, kind of even. That's where I would be loading the boat for the next big move to the upside.
Okay, and you have the next one is on the SLV, which is ETF for silver. It certainly is moving pretty good too, isn't it?
That's right. We recommended this back on April 1st at $24. It's up 25%. This was last year, right? So a year ago. It's up 25% in a year. And I think that silver's the same situation as gold. We're going to mark some time here until we pull back into the probably 26 range. And that's where you want to load the boat. And, and again, the next big move in silver could carry it to 40, then 55, then 75, then 100.
Yeah, I've always thought that silver would get to 100 sometimes. Now, this is the GDX, the Gold Miners Index, See this one?
Yeah, we recommended this on January 30th of this year at $39. It's up 14%. I think this is just testing a significant resistance at 46, and we're probably going to get a check back to the 42, 43 range. I think that's a good place to accumulate GDX. You see, here's the thing. These mining stocks have never seen the price of gold so much higher relative to their cost of energy. And so the profit margins are going to be unbelievable for the next 3 years or more for the miners. So I think you could see gold mining stocks really lead the metals themselves, as they've already been doing this year, but by orders of magnitude. We could see these stocks, double and triple over the next 3 to 5 years.
Wow. And now what are the junior gold miners? I don't know what that means. Are little smaller mines or what?
These are really small companies. They're not profitable. Okay. They burn a lot of cash, but every marginal ounce of gold they pull out of the ground hits the bottom line hard. And so, they're more leveraged play. And I think this is really where you're going to get a lot of leverage to the upside here. The same thing with the silver miners. And we actually just recently upgraded both of these on March 13th, and they're up pretty good already.
All right, we'll be right back with Jeff Hughes of Alpha Insights in just a moment, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, so talking with Jeff Hughes of Alpha Insights about global silver miners. I didn't even know that thing existed. I thought SIL was ETF for silver.
Nope, SIL is the Global X Silver Miners ETF, and it has a similar pattern to both GDX and GDXJ, these massive bases that have been built over the last 5 years of the, kind of cup and handle variety, and we're getting breakouts above the neckline or the saucer line, whatever you want to call it. And these breakouts, may need to consolidate a little bit more. These are weekly charts we're looking at, but I think what we're really seeing here is the very early innings of a massive move where these bases are going to resolve to the upside. We've got target prices of say $53 and $63, looking out the next 6 to 12, 18 months in these stocks, and that's a pretty good return on your investment. If you get to 63 in the next 18 months, that's a 50% upside potential. Not as much as you could make maybe trading futures if you're really, really good. But, I think for investors who are looking for a place to stockpile their capital while this bear market unfolds, this is going to be a great, contra trade to traditional equities. And I think, silver is exceptionally cheap, and we can talk about that a little bit more too. But at the end of the day, we like silver and many others. So we'll even talk about a new emerging trend as well.
Okay, the next one we're looking at is rare earth metals. And I got to raise my hand, Professor. I thought that was all part of AI. Why has this stuff been going down for so long? Well,
it's a long story. A lot of these are Chinese companies, okay, for one thing. And the Chinese market's not done very well until recently. And most of the rare earth metal mines in the world are in China, Asia, some in Australia and South Africa, very few in North America and South America. But we're going to be ramping those up. As you know, Trump just signed a bill yesterday increasing output at these mines. But that's going to take years to ramp up. And the bottom line is, if we are in a tariff war with China, it's going to constrain supply of these things. And what we're going to see is the value of those rare earth minerals rally dramatically, and I think it's going to carry these stocks with it. We have initial target prices that could get us to say $55, $56, up to maybe $63, then $75. Once we get these breakouts, I think a breakout above 45 would be pretty significant. We're already seeing empirical evidence of institutional buying in the volume. And we've got a buy signal from the MACD on a daily basis. And so the technicals are starting to turn up. This is, kind of a classic patterned inverted head and shoulders base type pattern that still has a lot of work to do. But eventually, I think we'll start to see these trading the same way the rest of the precious metals have been trading. Because why? They're rare.
Uh-oh. Hello?
Yeah, I'm still here.
Oh, I lost the contact here. I saw my computer flash. Go ahead. Please continue, Jeff.
Yeah, so I was just going to say, if we flip to the next slide, I would tell you what I think the world's cheapest asset is right now, and that is silver, Larry. Because if you look at the ratio of gold to silver, gold kind of being, honest money, if you will, right? Now, if you buy silver, you're getting 91 ounces of silver for every ounce of gold. I mean, that is a very, very extremely high ratio. It's only peaked above that level, say, 4 or 5 times in the history of the data, which goes back over 50 years. So in my opinion, we are topping and moving down now, and the next move should probably carry that ratio down to about 40-1. And so, silver relative to gold has a lot of potential. It's just very, very cheap, and that's one of the reasons that we're really emphasizing the miners here.
Mm-hmm. Wow, very interesting. Okay, we've got some things. We want to make sure we get your advertisement in, and here it comes, folks. This is the best letter for the money that I have ever seen in I started in 59, so it's been more than 3 decades. This is really a hell of a letter, buddy, and I don't get a dime from you, and I don't ever want a dime. But boy, you do a good job. That's all I can tell you.
We actually just surveyed our 5,000 of our subscribers, and we asked them, what they thought of the letter, and most people thought it was, very insightful macro observations and first-rate market analysis. And so that's really what we're trying to do. We're trying to bring these things to people's attention. We're trying to get people to think. We're trying to get people to challenge the consensus narrative and really think a lot deeper about the opportunities and the risks in the market. And so I think we're pretty good at that. This newsletter comes out once a month, usually the first Saturday of every month. The next publication will be on April 5th. Our last publication is available. You can go to our website, hugeinsights.substack.com, and you can read the first half of it for free. We put the first couple sections out for free, and then if you want to get deeper, you can buy a subscription. It's as cheap as, say, $12.50 or $15 a month, something like that. And that's for an annual subscription, or you can pay $25 a month if you just want to give it a test for a few months. It's very cheap. We make people a lot of money, let me tell you. If you subscribe to our service, you will make money from our service. There's no question about it. That's what people tell me.
Well, I've been watching it for about 4 years now, and you've been darn good, up and down.
Right. Yeah, we'll short the market as well. So it doesn't have to be a bull market for us to make money. Okay, now the best way is the website is
www.jwhinvestment.com, and then you have Alpha Insights /Alpha Insights for Twitter. I have no idea what Blue Sky is, but it's at HUG Insights. And Substack, I'm aware of that. It's huginsights.substack.com. So pay attention to what the young man's telling you, folks. He really knows what he does. And also happens to be a good friend of Rich Anderson. Well, that's a bad thing, but we won't even count that. Do you live near Rich?
He's in
you live closer to St. Paul, don't you?
No, I'm on the west side with him, but we're a few miles apart. But we get together, every now and then. I'll have to give him a call. I haven't gotten together with him in a while.
Yeah, he is. I talk to him almost every day, so it's great. Listen, I want to thank you for being on our show today. We'll have you on again in a couple of weeks, and we'll see how all this stuff metals out. Okay, my friend?
Yeah, absolutely. Thanks a lot. Take care now.
Okay, you bet. Okay, folks, let's hang on here a little bit, and we'll get up and see what's going on with some of this stuff here. We got the S&P up here again, backed off. Looks like it's getting ready to top up in this area, but we'll have to wait and see. That's what else we have going on. It looks interesting. Yep, that's going pretty good. How that NASDAQ one took off, didn't it? Yeah, no, it's back here again. So looks like it's going to go higher, folks. That's what we're paying attention to here. So let's keep our mind going. We got the Dow Jones coming back really good too. So it's getting up there in the last hour. So that's going to be an interesting one when we go through this as we see these things unfold here today. So we're going to have a break coming up shortly. And when we get back, I want to give you the last 10 minutes of what we're watching here. Okay, so stay with us.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, one more time. Here's where we are right now, right up in here. This is where we are. Figure Monday, Tuesday, Wednesday. We start down any time here the next couple days, and you see a big wide-ranging bar like this, get ready, because the chance favors the prepared mind. And I will tell you that if that happens, this move here was worth 30%. They took 30% off of that. They took 15% of it off in one day, much like they did in October 19th of 1987. This is different. This is a 92-year cycle. And anyway, that's what I'm watching. I'm afraid of that, but I'm prepared for it. Don't know if it's going to work or not, but I'm giving you the information. It's really simple. And folks, here's the best part. If Wednesday or Thursday we're above up in here, remember, this was 61% retracement in 29. We're not even at the 382 yet. And it's taken us 8 days. Are you kidding me? That's not a good sign. So just be careful. Make sure you protect yourself and everything else, and make sure you give to the poor, live every day in an attitude of gratitude, and may God bless. And I probably got a few more seconds here. Al's going to kill me, but and Tesla's not going to go bankrupt, as some people have said. But, it's dropped in half from a long time ago, but we'll have to wait and see how this stuff all turns out. But we'll be here Monday, and we'll see what happens. And then remember, the Monday, Tuesday, Wednesday, these are the keys. Because if we do start this down, then it's going to be nasty. And if we don't, we got another leg up. And that's what it could be. Because it's, some days it's, well, you know what I'm saying. You're not always right, but when you are, you got to say this is what you got to do. I just don't want you to get hurt during something like this. It's not a question of how much money you make. It's how much money you don't lose, okay? So live every day in an attitude of gratitude, and may God bless, and we'll see you Monday.